the best ETF and index fund in the stock market right now. Have you ever looked at your investment portfolio and felt a little underwhelmed? Maybe you're a high net worth individual who's made some good choices, but you still have this nagging feeling that you could be doing better. You're watching the news, seeing these massive wealth creation stories, and you wonder if you're leaving money on the table, if there's a smarter, more efficient way to build generational wealth. Well, you're not alone. The world of investing can feel like a labyrinth of complex strategies and high-priced advisors. But what if I told you there's a simpler, more powerful path? A strategy that is so effective, it's been championed by legendary investors and consistently outperforms most professional money managers, all while costing you next to nothing. This isn't about chasing the latest hot stock or speculating on meme coins. This is about disciplined, long-term wealth accumulation. Today, we're going to dive deep into the best-kept secret of successful investors, and I'm going to show you exactly how to implement it to supercharge your portfolio. We're talking about the best ETFs and index funds on the market right now. Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this valuable information. Now let's continue. Now, let's take a moment to understand the power of this strategy. Imagine you could own a tiny piece of every single one of the most successful companies in America. The innovators, the giants, the companies that are literally shaping our future. That's the core concept we'll be exploring. And the best part? It's completely accessible. The power of ETFs and index funds. So, what exactly are we talking about here? Let's break it down in a way that's easy to understand. Think of an index fund as a massive, carefully constructed basket of stocks. Instead of a single company, this basket holds a diverse collection of securities. A little bit of this, a little bit of that, all chosen to mirror a specific market index, like the S&P 500. When you invest in an S&P 500 index fund, you're not betting on one company to succeed. You're betting on the enduring strength of the 500 largest publicly traded companies in the United States. You're essentially buying into the engine of the American economy. Now, an ETF, or exchange-traded fund, is very similar, but with a key difference. While an index fund is typically bought and sold once a day, an ETF trades on the stock market all day long, just like an individual stock. It's the modern, more flexible cousin of the index fund. This liquidity is a massive advantage for investors who want to buy or sell whenever they choose during market hours. Both of these investment vehicles, the index fund and the ETF, offer you something priceless: diversification. Think of it like this. If you put all your money into one stock and that company has a bad quarter, your entire portfolio takes a hit. But if you own a fund that holds hundreds or even thousands of stocks, one company's bad news is barely a ripple in the ocean of your portfolio. This dramatically reduces risk without sacrificing the potential for incredible growth. Why fees are your biggest enemy? Before we reveal the specific funds, we have to talk about something crucial that can quietly and devastatingly erode your wealth over time: fees. Many people, even sophisticated investors, overlook this. A 1 or 2% annual management fee might not sound like much, but over decades, the compounding effect is staggering. Let's do a little mental math. Imagine you invest $100,000. A 1% fee means you're paying $1,000 a year. That doesn't seem so bad. But that $1,000 isn't just $1,000. It's $1,000 that would have been invested, compounding and growing for the rest of your life. Over 30 or 40 years, that small fee can cost you hundreds of thousands, even millions of dollars in lost returns. It's like a silent tax on your financial future. This is why the best ETFs and index funds are defined by their ultra-low expense ratios. We're talking about fractions of a percent. This means more of your money stays invested, working for you, instead of lining someone else's pockets. Unlocking the best ETF and index fund right now. All right, the moment you've been waiting for. When we talk about the best fund, we're not talking about a flashy high-risk play. We're talking about the most reliable, powerful wealth-building tool that will serve you for the long haul. The kind of investment you can set and forget, knowing it's doing the heavy lifting for you. The gold standard, the undeniable king of long-term wealth creation, is a fund that tracks the S&P 500. Why? Because the S&P 500 is a proven engine of American prosperity. It's made up of companies that have innovated, adapted, and grown through countless economic cycles. It's a blue-chip portfolio on autopilot. So, which specific funds should you consider? There are a few key players you'll want to know. 1. Vanguard S&P 500 ETF, ticker VO. This is a cornerstone for any serious portfolio. With an incredibly low expense ratio, you are buying into the S&P 500 at the absolute lowest cost possible. Vanguard pioneered this strategy, and they are a trusted name in the industry. Investing in VO is like owning a piece of the 500 most powerful companies in the world's most dynamic economy. It's simple, elegant, and incredibly effective. 2. iShares Core S&P 500 ETF, ticker IVV from BlackRock, another giant in the investment world. IVV is a direct competitor to VO. It tracks the same index and also boasts a rock-bottom expense ratio. The choice between VO and IVV often comes down to personal preference or the specific platform you're using. The performance and underlying holdings are virtually identical. This is a testament to the power of index investing. You don't need a genius fund manager to get market-beating returns. 3. SPDR S&P 500 ETF Trust, ticker SPY. This is the original S&P 500 ETF. It's the most heavily traded ETF in the world, often used by institutional investors for its liquidity. While its expense ratio is slightly higher than VO or IVV, it's still a phenomenal choice and the granddaddy of all ETFs. For an even broader approach, one that captures the entire American stock market, you might consider a total stock market fund. Vanguard Total Stock Market ETF, ticker VTI. This fund holds not just the S&P 500 companies, but also thousands of mid-cap and small-cap companies. This means you own a sliver of virtually every publicly traded company in the U.S. It's the ultimate in diversification, giving you exposure to the full spectrum of the American economy. Now, maybe you're thinking, what about international investments? What about companies in Europe or Asia? That's a great question. You can apply the same low-cost indexing strategy to the global stage. Vanguard Total World Stock ETF, ticker VT. This is the ultimate set-it-and-forget-it fund. With one single investment, you can own a piece of almost every publicly traded company on the planet, both in the U.S. and internationally. This provides the highest level of diversification and truly buys you into the growth of the entire global economy. The step-by-step path to success. So, how do you actually put this into action and start building serious wealth today? It's a clear, simple process. Step 1. Open a brokerage account. You'll need an account to buy and sell these funds. Look for a reputable, well-known broker like Fidelity, Charles Schwab, or Vanguard. These platforms have a reputation for stability, security, and often offer commission-free trading on their own funds, which keeps more money in your pocket. Step 2. Fund your account. This is the exciting part. You transfer money from your bank account into your new investment account. A great strategy, especially for high-net-worth individuals, is to set up an automatic monthly transfer. This is called dollar-cost averaging. It removes emotion from your investing. You buy whether the market is up or down, and over time, you build a powerful position at an average cost. Step 3. Buy your chosen fund. Log into your brokerage account, find the ETF or index fund you've chosen, like VO or VT, and place your order. It's as simple as buying a share of a single stock. That's it. You've just taken a monumental step toward financial freedom. The final and most important step is to simply leave it alone. Let time, compound interest, and the power of the global economy do the heavy lifting for you. Avoid the temptation to check it every day. Your financial future isn't a day trade, it's a marathon, closing with purpose. For too long, the financial world has been shrouded in mystery, filled with jargon and complex schemes designed to make you feel like you need an expensive professional to succeed. But the truth is, the most powerful and reliable path to wealth is often the simplest. By embracing low-cost, diversified index funds and ETFs, you are putting yourself in the driver's seat of your financial destiny. The hope here is not just that you make more money, but that you gain the confidence and clarity to take control. That you stop letting fear and uncertainty dictate your decisions and start building a legacy of financial security. This path has been proven for decades, and now it is your turn to walk it. If this has sparked your interest and given you a clear, actionable plan, please do me a favor. Take a moment to hit that like button to help more people discover this powerful information. Subscribe to the channel so you don't miss our next deep dive into building lasting wealth, and leave a comment below. I'd love to hear which of these funds you're considering for your own portfolio. Your engagement helps us grow this community of smart, disciplined investors. Thank you for listening, and I'll see you in the next one. Disclaimer: this video is for equipping, educating, and empowering and should not be considered financial advice. Investing involves risk. Always consult with a qualified financial professional before making any investment decisions. Your financial well-being is paramount.